And this latest round of proposed tariffs on Chinese imports have items like smartphones, apparel, and toys caught in the crosshairs of the trade conflict. So what could it potentially mean for consumer spending here in the U.S., which has, of course, been an engine of growth for our economy? Joining us tonight is Brett Ryan. He's Senior U.S. Economist at Deutsche Bank. Brett, good to see you. Thanks for joining us tonight.
Great. Thank you for having me on the program.
Already one retail trade group has been out saying the consumers should look for higher prices at the back-to-school season and, of course, at the important holiday shopping season. What kind of an impact do you see happening?
Well, I would agree with the chairman of Economic Advisors, Mr. Kudlow, that the impact from the tariffs themselves will be not very direct in terms of consumer spending. But consumer spending is expected to slow already over the back half of the year. And the issue is if the weakness in business confidence begins to affect the labor market and hiring growth slows down, then that could spill over into consumer confidence later this year, causing a sharper slowdown in consumer spending than what we're already expecting as the boost from tax cuts from last year continues to fade.
There's also the psychological impact, is there not, on the consumer with the headline risk? We hear a lot about these trade tariffs, and we're hearing whether or not it ends up to be true on a meaningful basis. We hear a lot about the trickle down to the consumer. At what point does the consumer pull back based on the expectation that they will get hit?
That's a very good point, Sue. And the University of Michigan survey noted today that consumers are already feeling a little bit anxious about the policy uncertainty, and we could see confidence begin to tick lower over the next few months, and that in turn could have an impact in consumer spending towards the end of the summer and into the back-to-school season.
We've already been establishing that we have essentially two economies right now, where the consumer is strong, but businesses are holding back on investment because of fears about the trade. So what you seem to be suggesting is that lack of business investment, or the slowdown, will eventually hurt the job market, which eventually hurts the consumer. Is that what we're talking about here?
Yes, that's correct. The business confidence tends to lead consumer confidence. And when we see business confidence falling as quickly as we are with the manufacturing ISM and the Chicago PMI, that does not bode well for consumer confidence the longer that this persists.
Brett Ryan with Deutsche Bank. Good to see you again. Thanks for joining us tonight.
Great. Thank you for having me.
Yeah.